The 30-year Treasury yield ended Friday at 5.04%, and it just barely kissed 5.15% on Thursday. These above 5% yields are the highest since the debt scare back in October of 2023. The 20-year yield has also been above 5% for the last 3 days of the last week. Now understand this. The Fed started cutting its policy rates in mid-September 2024 by the total of 100 basis points so far. The effective federal fund rate, which the Fed targets with its policy rates, has dropped by 100 basis points, and that's pretty big. They've gone from 5.33 to 4.33, and you can see that in the blue line on the chart you're looking at right now. But there's always a but. Since mid-September, the 30-year yield has surged by 110 basis points. It's a spectacular counter move, and you can see that in the red line on the chart. The gyrations around Liberation Day now look just like the same additional squiggles in a longer upward trend. Now, the only thing I have to say about rates is this. When we see spikes as we are now, we usually see them and they're met with a downward trend. It seems like 7 is going to be around the median, and it looks like we're going to vacillate between the low 6s and the mid 7s. Again, I'm going on the word from all the agencies who see rates being somewhere in the mid 5s by the end of 2026. You know, the agencies that can actually impact mortgage interest rates. So according to the super accurate Redfin, home values are going to drop by a total of 1% this year. Yes, 1%. You heard it here first. 1% this year, effectively making housing still unaffordable for the masses of yearning first-time homebuyers. What about next year? Can we see about a 20% drop in home values? And if we did, the question then becomes, would that be a good thing or a bad thing? Well, I want you to consider this. Deflation creates the valued but endangered middle class that we all yearn for. We have inflation, which kills our jobs as lenders and realtors, but deflation, well, that would enhance our jobs. In our past, the Great Deflation occurred at the beginning of a period called the Second Industrial Revolution. Think the 1950s. It was characterized by dramatic increases in productivity made possible by the transition from an agricultural industry to an industrialized industry as the leading component of our economy. The new leading industries at the time were health, steel, railroads, machinery, steam shipping, and animal-powered agricultural mechanization. Now we have tech. Tech-driven everything. Planes, cars, utilities, agriculture, lifestyle, I mean everything. You have to understand that the prices of most basic commodities and mass-produced all fell in the 50s, and they did so almost simultaneously. Nominal wages remained steady, resulting in a pronounced and prolonged rise in real wages, disposable income, and savings, essentially giving birth to what we now call, the middle class. This is the direction that we need to get back to. And you probably wonder why I'm saying this, but for that to happen, housing, me and you, well, we need to lead the way. So as we sit here today, a 1% drop, well, that's just not going to cut it. For all of us to prosper, we need to see significant reductions in our housing expenses. So realtors, you guys got to do your part. Correct the market. Don't put in an offer to buy a house unless it would otherwise be deemed as an insulting offer, a lowball offer. I mean, why not? Over 50% of offers right now come with some type of seller concession. So if you do this, if you close a deal and you set an unignorable comp in that area, the rest of the housing and real estate market is going to have to follow it. You will effectively bring down the value of all houses, creating deflation. The question is, are you the brave realtor who's going to start the housing correction that we need to have in front of us? Because you right there, I hope it's you, and I hope this helps. Hey guys, Brian Stephens here with Mortgage Shots. Does this market scare you? Because it does not scare me. I have met more good quality realtors in the past 6 months than I've seen in the past 30 years. There are people who are killing it, but you have to work with recession-proof people if you want to be recession-proof. If you want to know what we're doing over here, we have a team within the Loan Factory, which affords you the best interest rates going, uncompromisingly fantastic technology, and a team that wants to see you succeed. If you want to be a part of what we're doing, just fill out the information down below and we'll give you a ring.